Good evening, everyone. My name is Juliet, also known as Crypto Queen. So today I welcome everyone in today's webinar. And I want to believe that at the end of this webinar, we will be living with great values. Today, this webinar is brought to us by Crypto Queen Academy and Digital World Academy. So the purpose of this continuous webinar is to help individual or anyone in our both academy who have desire to learning trading skill to acquire required knowledge to be able to trade independently without leveraging on anyone's signals or support to be able to make trade decision. So this class has been a continuous class. If today is your first time of joining our webinar today, we want to especially welcome you. So I wouldn't proceed without acknowledging the help of our leaders that has been supporting our academy, both those who are here and those who are not here. We want to appreciate all your support. We ask that the good Lord will continue to bless you. And to our able leader, Newton, who has always been there for us and who will be facilitating today's class, we want to also appreciate you for all you do for us today. So today's class, we've earlier shared our topic of today, which is going to be centered on market structure. So market structure is part of the technical analysis class. We've been on the journey of technical analysis for some weeks now, and we hope that if you have been following us through from the beginning to the end, that at the end of this technical analysis class, you will be able to support yourself in making trade decisions. So before I hand over to our leader, I just want to quickly give us a brief explanation of what market structure is. So when we talk about market structure, we are talking of the behavior and conditions and current flow of the market. So market structure is actually different from price action. For example, if the price action is creating a higher high or an higher low, it could signal a formation of bullish market structure. In the same way, if it's creating a lower low or lower high, it could also send out a signal of sending a signal of bullish bearish structure. So today our leader is going to walk us through on a clear, detailed explanation and knowledge around market structure. So it just has to do, you cannot talk about market structure without talking about trend. So it could either go either way, bearish or bullish. So I would like us to pay attention as a class is going on, so that if you have any question to ask, write it down. The class would be interactive as usual. So write it down and make sure that you ask your question where you are not cleared. So without wasting much of our time, I would like to open the floor and hand over to our leader, Mr. Newton.
All right. Good evening, everyone. It's nice to have you all here. So tonight, we'll be looking at market structure. We'll be looking at a detailed explanation of what the market structure is and how you can take advantage of that. But before then, I will quickly want to remind us of the previous classes we've had. I need you to know that all the classes we've been having is structured such that if you are a newbie, you would be able to have that insane information from what the market, the forex market is, to how the candles, which is the most important information of the forex knowledge that you should have, operate, and what patterns they form, the information that tells you, to how the market moves, which is the market structure. I need you to know that all of this information that you have access to for free is actually some pro mentors paid content out there. So if you're actually wise and smart enough, you might want to take all of this information to your advantage as at this time that you have access to it. Trust me, very soon they will become paid content, and you have to pay $500 above before you can have access to them. It is up to you. All right, so back to business. Remember, we talked about candlesticks types, patterns, and then we talked about chart patterns. Now, we say candlesticks are graphical representations of a chart. All of these charts that you see on my screen is made up of different types of candles. And once you are able to understand what these candles are, what they form, and the information that they carry out, then definitely you are 50% into knowing the Forex market professionally. All right, so now we talk about market structure. Then what then do we mean, or what do we mean by market structure? It's simple from the name market structure. Of course, we know what structure is. Okay, now the market structure is simply just price actions and how it moves. Okay, the condition that you meet the market as at the time you bump into the market. Okay, now when we say movement, of course, we know that movement is just, when something moves, when there's a movement, in a particular directions. Okay, so when we say market structures, we refer to the current, directions of the market. Remember when we talk about a brief introduction into types of analysis that we have, when we talked about technical analysis, talked about fundamental analysis and sentiment analysis, and we say that under technical analysis, we talked about the different trends that you always find in the market, if I can take your mind back. And then we talk about, we mentioned uptrend, downtrend, and of course, we mentioned sideways, which we also refer to as what? Consolidations. Okay. All right. So now we are back to market structure, and we'll be looking at different trends that you would always find the market in. Okay. It is either the market is going up, or the market is going down, or the market moves sideways. So when we say market structures, we're talking about the direction of the market and how the market moves, the formation the market forms when it moves. We understand that market does not move on a straight line. The movement of the market is always what? Is always in this form, zigzag form. It goes in this way. So while price is busy forming this zigzag form, there are interpretation to all of this that you see, and that is what we'll be treating tonight. All right. So now, when we say market structure, as a trader, the first thing you want to know is you want to know what direction of the market, okay, is at the time you enter the market. You want to know if the market is up or the market is down. Okay. So our lecture tonight is going to be a practical explanation. We'll do less of theory and more of practical, as we have always done. So permit me to clear up my screen. All right. Now, so this is Euro USD on a 1 week time frame. Okay. You can actually go look up your structure on any time frame you want. But I would always tell you that as a pro trader, you want to start your analysis from the higher time frame. What you analyze on the higher time frame is most likely 88% going to play out. Then you can now narrow down to lower time frame for entry confirmation. So now I want to actually analyze Euro USD on a 1 week time frame. I want to know what structure currently this asset is maintaining. Now, if you look at my screen, if you observe from this point, from this point to this point, okay, the market has been doing what? Can somebody tell me what the market has been doing from this point to this point, from here to this point? From this point to this point. Can someone just unmute and then tell me what the market has busy been doing from this point to this point? Thank you. Someone said downtrend. Mr. Musa, thank you for that. Yes, the market has been in a downtrend. Now, how do we know for the newbies that this market has been in a downtrend? Now, like I told you, the market moves in a zigzag form, okay? And then while market moves, there are formations that market, come up with when it moves. Okay, so we'll be looking at that. Now, there's something we call the low point and the high point. Remember when we talked about candlesticks pattern? We say a candle has a body, okay? And then it has what? It has a tail, and of course, it also has a tail on its head. And we call these two tails, we call them the shadows. And of course, we call this tail as a low point, and then we call this tail as what? As the high point. Okay? Now, we refer to this high point as the highest point price got to when price opened. So let's assume this is actually a green candle. Remember, we have two types of candles. Okay? We have, hold on. I need you to pay. I'm going to be very slow with this market structure because it is very important that you understand what I'm teaching you tonight. Market structure is very, very important. If you understand market structure, then plus the candlesticks and chart patterns knowledge that you already have, trust me, analyzing the markets will be very, very easy for you. It will be very, very, very easy for you. Thank you, Mr. Christopher, for acknowledging that we are in a downtrend. All right, so now let us look at this scenario. The popular candlesticks that you always have is what? Is a green candle, right? A green candle, which is referred to as what? As a bullish candle, and then what? A red candle. Okay. And now, this whole place is referred to as what? The body of the candle. And then we have what? We have the tails of the candle, which we call the upper shadow and the down shadow. And sometimes we call this tail, we call it wicks. W-I-C-K. We call it wick. It's a wick. So now, this up here, this shadow here, both of them represent the highest point price got to, and here represent the lowest point price got to. Okay, so hence we call this place swing low, and we call this place swing high, or you call it high point, and we call this place low point. Okay, now, so now looking at this example, okay, we could see that market has just been what? Trending down, it has been going down. Now, if you observe critically, you will see that as market was actually moving down, it didn't go on a straight line. Okay, market was doing what? Market was busy making a zigzag movement. If you observe, can you observe the zigzag movement? Okay, now this zigzag movement represents two factors. Okay, now we'll be listing out those factors so you get it clear. Now we see that since we know that a candle has a high point and a low point, and then every time market moves from a point to a point, there's a term to it. Now, so if market moves, let's say this market, okay, wants to start trading now from here. All right. Now, this is what we are going to look. This is how we're going to look at this market. Now we have a high point here, okay, and then we have a low point here. Now this is how this market will move from this high point here. Okay, let me do this. Just 1 second. Let me do this. All right, so I'm going to actually draw something to make you really understand what I'm trying to explain to you. Now we have this high point. Okay. Now this high point represents the highest point price got to. Okay, highest point price got to. Now market wants to start moving now. Now we have an impulse movement. We have impulse, and then we have a pullback. We have impulse, and then we have a pullback. We have impulse, and then we have a pullback. Now, every time price moves down, okay, it's called an impulsive movement. Impulsive. You check the meaning of impulsive from the dictionary, you understand what that means. More like a force movement. Now, market moves down. So every time market moves, make this impulsive move, there's always a pullback. Okay. Now we call this pullback corrective move. Pullback. Sorry, I can't use this to really, be fast about this. Okay. So we call it pullback. All right. So every impulsive move, price always have a pullback, and this pullback we call it a corrective move. Like price will always make corrections for every move it makes. Okay. Now, so in this sense, okay, we can actually say price made this high and then make this low. Okay. Now, so I'm going to actually clean this off. I'm going to clean this off. Then we're going to use the real chart, to make the description so it can actually sync very well. Now, bear in mind what I'll be doing to the screen. Okay, I'll be marking out every impulse and every pullback. Okay, every impulse and every pullback. All right, so let's start then. Now we're going to be having, H will represent highest points price got to. Okay, so let me keep this one here. Let me make another. Then we have low, L as low point. Okay, let me put this here because these are the. You can't be asking questions during the class. Please, we have time for questions. Don't distract away. No time, no questions now until after the class, please. Then we have HH. Okay, I'll be telling you what this represents. And then we have low. All right, so now, I'll be tagging all of these things we just listed so that you can have a very, very good and sharp understanding. Now, so let's assume this is where we entered the market. We just went on our charts. All right, this is where we entered. And our price has been making this movement all the way down. Now, I'm going to be tagging all of these movements so you can have a full understanding how our price move and why it does what it does. Okay, so price move from this point. So this point is considered to be the highest point price got to before it starts to trend down. Now, when price starts to trend down, you observe that price didn't just move on a straight line down. No, price was making some zigzag kind of formations. And now, so we call this zigzag, we have names that we use to describe them. Okay, now, so look at it. Price moves from here to here. So this is an impulsive move. Do me a favor, go and check the meaning of what an impulsive move after this class in a dictionary. Okay, more like a forceful movement. So price makes so anytime price makes a move like this, an impulse movement like this, there's always a correction. Now, this correction is either called a pullback or a retracement. Okay, so this is more like impulse. Okay, so price, now let us name this the proper way. Now we have high, and then we have what? And then we have low. Okay, sorry, let me clear this. So we have high, and then we have low. Okay, and now, so since we have high and low, the retracement, okay, is now going to be what? It's going to be called lower high. Okay, so why this place will be called lower high? Because this high is higher than this high. All right. So we are going to have another tag. Okay, so let's tag it LH. Right. So we are going to put, all right. So now we have high and we have low, and we have lower high. So if we have high and we have low, and then price made this impulse, pullback or retracement or corrective move, and this corrective move is called lower high, what are we going to call the next impulse movement low that price makes? I want it to be an interaction. Can someone just tell me in the chat box quickly what this next place would be called? If this place is called the first high, because this is where the move started from, and the price made an impulse move to the low, and price made its low point, and then pull back, okay, and then pull back up, and then made this lower high. What will this low, the next low that price makes, this next impulse movement makes, what will it be called? Let me look at the chat box. Lower low. Thank you so much. Thank you so much. Thank you so much, Mr. Christopher, Mr. Nsika, and Mr. Is it Elizabeth? Is it Mrs. Elizabeth or Mr. Elizabeth? Thank you so much for that. This place will now be called lower low. Okay, so this is how price will continue to make this movement. So now we have high, we have low. High, we have what? We have lower low. And of course, price makes another corrective move. It's going to be called lower high. Okay, it's going to be called lower high. Okay, lower low. Okay, lower high, lower low. You see, I'm actually very slow so that you guys can really understand it, because it's important. Okay, let me expand a little bit so you guys can see very well. All right, so lower low, high low, lower high, lower low, lower high, lower low, impulse, pullback, impulse, pullback, or impulse retracement, impulse retracement, impulse retracement, impulse retracement, lower high. Okay, now so this is a typical example of what? A downtrend. This is a typical example of a downtrend. Now observe another thing. Price was busy making high and low, lower high, high and low, lower, and as price was busy doing this, structure is being broken, hence the market structure. Now what is this structure that is being broken? So now let me now bring our attention to it. We've seen why price make these zigzag movements and the terminology that is used to describe it. Okay, so let's just finish doing this. It looks more okay. Let's finish doing this. Okay, now I'm going to be using all of the things that we have learned, okay, in this video, in this class. Sorry, I said video. Sorry about that. I'm going to be using everything that we've learned from the candlesticks, types, and patterns and chart patterns to this current market structure. All right. Now watch. Now, so we've seen that price made high and price made low, high, up to this point, making lower low. All right. Before this reversal and price begins to go up. So this is actually a typical example. A typical example of what? A downtrend. Now, as price was busy making this zigzag movement, structure is being broken. Structure is being broken. So the structure that is broken, that is when you now take note. Okay, so price broke this low and then moves. Okay, now let us look at how price actually, our structure was actually, getting broken here, right? Now let us see. Now if you watch, this was the highest point and this was the lowest point, right? Price got to before this retracement. Okay, let me do this. Let me expand this a little bit so that you guys can see what I'm talking about. I hope this is clear. Now watch. So this is the highest point price got to and the lowest point before this retracement. Before this retracement, right? Now let us see. Now, so Watch it this way. I hope you guys can hear me clearly. Please flood the chat box that you can hear me before I continue. If you guys can hear me, please flood the chat box that you can hear me before I continue. I hope you guys can hear me. Please let me know in the chat box that you can hear me before I continue. All right, thank you so much. All right, so that means that I'm actually being heard. Okay, thank you very much. So, all right. Okay, so now let us see how let us see how market structure was actually formed. The first explanation we've had is part of the market structure. So let us see how market will truly form, this structure we talked about, and how we can actually use that to advantage. All right. So now observe, price made this high and then this low before this retracement. All right. So at every lower low that you see, a structure is being broken. And now this is how to identify the structure. Now I'm going to use my trend line to mark out the structure. Now watch this low. Now if you look, this is the low price made. The first time price high and then made this low. You mark it out. Just mark it out somewhere. Okay. Now we've marked this low out, right? Now price made this low and then retraced, right? Retraced back up. Now watch what happens the next time price. You see, price came and what invalidated that low, break that through that low, right? Broke this low and then came down and then we even omitted another low here. I just spread that now. See, there's another low here, price made, and there's also another lower high price made here. Okay, so this is a clearer view. So this is where price makes it low. Price makes it low. Now watch. Price. This was a high where price started from, made this low, okay, and it made this high. So this was an impulse movement to a pullback, and then there was a low. Now the next movement price made another impulse movement, breaking this first low, okay, then making another low, which is the low of this, and that is why we call it lower low, because it's a low of this. Okay, all right, and then made another what before another retracement, which is a pullback, making this lower high, because we call this lower high because it's a low of this high. This high is higher than this. This high is lower than this high. So that's why we call this lower high. And because this high here is lower than this, and that's why we call this what? Lower high. That's why this high is higher than all of this high, but this is the highest. Now, so every low that price breaks, a structure is broken. And at every structure that is broken, there's always a pullback. A pullback always happens before a structure is broken. So I'll continue to mark all the lows that price break. Okay. So let me mark it this way. This was the first low price broke. Okay. So let's go and let's clone this. Let's clone this. Now, so price made another low here, right? Another structure is broken. Here, price made another low. Let's go again. Let's clone this. You see, price came all the way and made another low. Now, at every low, there's always a pullback before a structure is broken. Can you see? I hope it's loud and clear. If I'm actually giving you values, please let me know that you're actually getting values from Crypto Queen Academy and Digital World Academic lecture tonight. Let me know in the chat box that you're getting what I'm trying to explain to you and I am communicating value to you. Let me know. Watch it. Every low that price breaks, okay, before price breaks that low, there's always a pullback. A smart trader will always take advantage of what? The pullback. You are going to see how all of the things we've been learning from day one to now applies in the market. Thank you so much for letting me know that we are giving you guys value and you guys are actually getting what we are discussing tonight. Now, so let us continue this. Let us continue. So this is another low. Price keeps breaking. Price keeps breaking all the lows. And before the low, there's always a pullback. After the pullback, what happens? Price breaks through. Okay, very clear structure. Very clear structure. All right. There's always a pullback before price breaks the low. All right. So now watch. We talked about candlesticks, types, and patterns, right? Now let me tell you something. As a smart trader, you want to enter the market. Let's assume you've entered the market. You want to enter the market, and price has made all it moves from here to this point. Okay, and you're like, okay, so where is the next place I'm actually going to enter into? How will I get an entry into this market? Because price is already with breaking structure. Now, what you do is the first thing you want to look at. You want to look at the direction of the market. Okay, now you want to look at market structure. All right, so let's say we now saw that, okay, price has broken this low here, this place. Look at where I'm pointing. Let me mark it out. So let's say price has actually breaking this low here, okay, and it is making what? It is making, as a smart trader, price breaks that low, okay, price breaks this low here. What I would do is I will wait for price to pull back, okay, and then do what? Once price pulls back, I will now look at the candlesticks pattern, okay, and chart patterns that price is actually telling me here, okay. That will now enable me to enter the market at this sniper entry point. So because I know that once price breaks this low and then there's a pullback, it is going to what? It is going to invalidate this low. The only time my setup will be invalid is if price came after price, retracing back and then came all the way down, and this low could not take out this low. I would know that, okay, price is not going to take out this low, then I'm going to exit. Then I will now be having in mind, okay, maybe price might actually reverse from here and start to make its way back up. Do you understand? So what I normally do is always look out for the structure price is making at that point in time. It will guide you as to how you can join in a trend, okay, and of course, where to exit the market when price gives you sign. So it's clear. Price keeps making an impulse and pullback, impulse, pullback, impulse, pullback, until finally, now look at what happens. Look at what happens here. Just like what I just explained. Price broke this low and came here. All right. Now, what do we expect? We expect price to do what? To retrace, okay, and then come back to break this low. But what did the price do? Price didn't come back to break this low, but instead, what did price do? Price went and broke what? The high point it made, and that will now bring us to what? Looking at how price move in an uptrend manner. Okay, now what we just learned now is how price move in a downtrend. Price moves in a downtrend, right? Now we're going to look how price moves in an uptrend. Like I told you, market structure is categorized into three ways. It's either the market is actually going up, or the market is coming down, or the market is moving sideways. Now let us look at a typical example of how the market moves in an uptrend. Okay, let us look for a very good example of how the market moves in an uptrend. Okay, so all right, let me use this. Now it's simple. From the explanation of what I just explained to you on the terminologies we use for an impulse and pullback movement, price actually had a high, made a low, they make higher, they make a lower high and a lower low. The same way price keep making what? Price, there's a low point here, right? So let us use our let's be fast so that because there's no time, we can quickly catch up. All right, so where is it? This now I wanted to use. Okay, here we are. All right, here we are. Let's use this one. All right, if you watch from the explanation you've gotten, you see that price made a low here. There's a low, and there's what? An impulse, which is high. All right, and there's another low here. Now this low, we call this low We call this low higher low. Okay, call this low higher low. Now, why do we call this low higher low? Remember, we had a low point. Price started from this low point and then went all the way to this high point and then it retraced. Now, because this low, okay, is higher than this low, that's why we call it a lower high. Because the thing is, the movement is actually going on. So there's no way this low will be lower than this. No, because price is what? Moving in an uptrend. And it's simple. So if this place is called lower high, higher low, sorry. So the next impulse movement will be called what? I want answer in the chat box. What is the next movement going to call? So what are we going to name this place? I want a quick answer in the chat box if you've been following from what we've explained from high. Nice one. What's the name of this person? Hi, Mr. Musa. Thank you so much, everyone, for that. So we're going to call this place higher high. All right, higher high. So we have high and low. So up to the point where price, you know, up to this point. Okay. Now, as price was busy moving up, we can as well say price was actually what was breaking structure. It's just simple. Price keeps breaking structure. What? When price made his move, retraced, broke the structure, what did it do? It made another impulsive movement to the upside. Right? It made another impulsive movement to the upside. And what did it do? It retraced back down here and then move again. The next movement, what did it do? It invalidated this high and made this, look at this long impulsive movement to this point. Okay, long impulsive movement to that point. And then made another was this is another high and then pull back. So at every impulse movement, there's always a pullback, and this pullback is always called, is either you call it a pullback or a retracement. All right, it is either you call it a pullback or a retracement. So every impulse movement you have in the market, there's always a corrective movement. That corrective move is either called a retracement or a pullback. So that person that asked me that question the last time, if an impulse movement is also a pullback, I just explained your question now. Okay, so impulse movement will always be that movement to a particular direction. In this case, in an uptrend, look at that long impulse movement. So after every long movement like this, there's always what? A correction. You know, and this corrective move is where traders who are actually in this long trade are actually taking their profit, selling off their profit. So that is why you always have this corrective move to the downside as pullback or as retracement. All right. So this is basically and typically what we call market structure. It's just very simple. Now, if you look at how this structure forms, as a smart trader, you are in the market moves up, and you see the market has actually made this retracement. This is where you should be looking for entry. And of course, when you're looking for entry, what will you be putting into consideration? You'll be looking at candlesticks types and patterns and chart patterns as from here. Mind you, this is a weekly time frame. By the time we narrow down to a daily time frame and 4-hour time frame, you will see the candlesticks formations clearly. You now see how this thing works hand in hand. If you don't have the knowledge of the candlesticks and candlesticks patterns, definitely you will not be able to effectively use market structure to your advantage. It's just simple. So tonight, we've been able to consider what an uptrend is and what a downtrend is using market structure to explain price movements. Now let us look what a side movement. When we say side movement, this is what we mean. Price moving in this side kind of side movement or consolidation. You always find that in a range. Okay. Now let us look at what a consolidation actually means. Okay, let's look for a typical example of a consolidation. All right. So let's look for a very typical example of consolidation. Okay, let's go to 1-hour time frame. You mostly see consolidating move. All right. Now I'm going to show you a typical example of what a consolidation. Now just look at this. What did you observe? Market has just been, let me even use a more discrete pictorial representation so you can have a clear understanding. All right, see, just look at how market has been moving up, down, up, down, up, down in this box. Okay, so this is just a perfect example of what market moving sideways, a consolidative market. Okay, or there's another name for it when you see where they state choppy, like CHOOPY. When you see something like this, you know that when you say choppy, the market is actually choppy. What they're trying to say is market is actually in a corrective phase. This is a consolidation. This is market moving sideways. It's, if you're not a pro trader, you should stay clear of this kind of trade because it can actually finish all your funds. Okay, pro traders can actually trade this. They can scalp this. They know where, okay, market gets there, up like this. They know what point they can actually use to their advantage to take, all right. So this is what we actually refer to as what? A choppy market or a sideways market. So in this market structure phase, market is moving in a sideways, this is a sideways movement. Okay. Sometimes it is best that we stay clear of this kind of market. Okay, if you don't have a very good idea of how the market moves. So this is just basically what market structure is. Okay, in an advanced level, I will be teaching you how you can actually use this market structure to your advantage. Then you'll be able to spot your demand and supply zones, and of course, you'll be able to spot your order block. But basically, knowing what trend the market is and its movement and how you can actually use that to your advantage is what we have actually treated tonight. Look at this perfect sweet price movement. This is an uptrend, right? Now see how price is big. It's just perfectly just breaking structure. And every structure price break, you see. Now let's use candlesticks and candlesticks patterns now here to advantage. This is 1 hour time frame. This is the highest point price making, and then price retraced, right? Price retraced and then broke and then came back. Now look at this point here. If I was in the market when price actually had this retracement to the downside, and I was at this point here, who can tell me what candlesticks formation can actually give me that confidence to be able to enter this trade, knowing that the price will actually go up? Can someone just tell me in the chat box? What candlestick formation is currently forming here that will give me confidence that, okay, price is about to move. I better just join this market now. Tell me, who's going to tell me that? Bullish engulfing. My people are really, I just love this. This is just to tell you that all our effort has not been in vain. This is a bullish engulfing candle. Thank you so much, guys, for that answer. Now just look at this combination. You know what market, you know what the current trend of the market is, right? You are at the point where market actually made a corrective move, a pullback or a retracement. Now, you now look out for what? The candlesticks formations here, candlesticks chart patterns, okay? Candlesticks patterns here forming. That gives you that confidence, okay, that this guy has just broken his structure, okay, and the next movement will go, is aiming for the next high. Price is going to go to go and create another high. Trust me, you can actually be using this to scalp, okay, because you know that when price creates another high, it will retrace. So by the time price gets to this high, you exit, sell it back down, make this structure, look at your candlestick formation, enter a long again. So you'll be entering long, sell, or say you enter from here, market made this move, came down, you had another position. Market broke your current high, made another high, retrace, you enter another position. This is how you can actually turn $100 to $5,000, and people will begin to wonder how you're able to do it. That's because you took advantage of what the market structure. Market made a high, made higher high, made a higher low, broke the previous higher high, you made a retracement or a pullback, you enter another position, broke the previous high, another position, previous high, another position, previous high, pullback, another position, up to the point where you are able to what be. We'll get to that point where you are able to what to spot market reversals. And this is at the point where you do what? Where you need to take your profits and then position for another trend in the market. Okay, if you observe, price temporarily actually had a sell here, okay, before starting. So by the time you begin to fix in all of these things together and see how they work, you see that these things work hand to hand. You can't leave one out of one, and you cannot jump one and say you want to leap over to the next step. It doesn't work that way. Okay, so if you look at all we've been teaching you from our onset, from this academy, you will see that we started with what the market is, tools you need to know as a trader, position you give you that edge. Okay, now we started from the very, very, very basic, and this very basic happens to be the most important of all of this, because tell me if these candles, these are the only thing you see. Forget about all the structures. You don't know what these candles are, and market structure is useless to you. Okay, so that was why we started from candlesticks, to candlesticks types, to the patterns these candlesticks forms, and of course chart patterns. If you want to use chart patterns and market structure to your advantage, you see, my people are really, 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 really active. Someone just said in the chat box, head and shoulder front before the reversal. Yes, God bless you. And this is the chart patterns that we have done what? That we have treated. You see, that's to tell you that people are really taking note of what we've been teaching, and they're actually using it to their advantage. Now look at it. This is the left shoulder, and this is the right shoulder. And what? Sorry, this is supposed to be R. And this is what? This is head shoulder. And remember, we talk about what? A neckline. Now consider this neckline market structure, okay, that was what? Invalidated. It's as simple as that. See how all of these things work hand in hand. Okay, now tell me, these are contents that you pay huge sum of money out there that you get for free here, and some people are really not taking advantage of this. Like I told you, that very soon all of these contents that you tend to have for free will become paid content. So I think it's best that you make use of all of the time and the access that you have now to really, really, really store this. These are free content that is enough to guide a newbie to pro. So thank you everyone coming up. Okay, so this is now time for us to take questions and to see if we actually delivered, if we actually was able to impact you with value tonight, and what question you probably might be having, and have your question answered. All right, over to you, Crypto Queen. Thank you so much for everyone coming. So if you have questions, please ask your questions. You can unmute yourself now, and let us make this interactive before
please, if you have any.
Thank you so much.
Okay, thank you, Mr. Newton. That was a wonderful section. We appreciate you. So if you have any question, kindly raise your hands. So we're going to unmute simultaneously. So raise your hands, then I will unmute you to ask your question. Thank you. Achiever, please proceed to ask your question.
Good evening, Ma. Good evening, Crypto Coin. I really appreciate the presenter tonight. Thanks a lot. Really appreciate and got a whole lot of value in tonight's presentation. I really appreciate the training, sir. We've paid for a whole lot of course. Honestly speaking, to be candid, value like this is not gotten, is not received. Honestly, word of mouth can't appreciate you enough. Thanks so much, the organizers and the trainers. Thanks so much, sir. Really appreciate this business and thank you very much.
Thank you so much. Thank you so much for that. Crypto Queen, there are other lots of hands up. Mr. Achiba, please, can you ask a question? Please unmute yourself and ask a question. Mr. Achiba, if you can hear me.
Okay, the training, sir. I really appreciate your effort. Thanks so much, sir. Got a whole lot of value from the training. Thanks so much, sir. Really appreciate it.
You're welcome. Thank you so much. Mr. Obed, please, you can unmute yourself, Mr. Obed.
All right. Good evening, Crypto Queen and our noble presenter. I really enjoyed the lesson. It was so enjoyable. Thank you so much. I have a question. Please, could you illustrate a little for us what actually invalidates an uptrend or a downtrend market?
Okay. That would be in our next class. It's not going to be for tonight. Like we actually taking this, in bits so that you don't get to consume too much. Like I told you, but anyway, if you actually pay attention to the last classes we've had, based on the chart patterns and candlesticks formations that we have, candles, we always tell you what price we do next. Okay, candles will always tell you what candles. Now let me use this as an instance. Now look at my screen here. Now price is busy, has been busy making all of this choppy movement. Now, how do you know when price will actually, what price will do if it's going to break to the upside or down? Now look at what price has been doing. It's just simple. Price has been busy making this up and down, up and down, up and down, up and down movement. Now, if you watch here, price actually made this movement to the up and then came down. Now, price didn't come down completely here. Now, okay, that's not enough reason. Now, so in best situations like this, you wait for price to actually break out first. Okay, so price will either break out to each of the direction. It could be down or up. So once price breaks out, and then of course retrace, at that retracement point is when you now begin to watch out for your candles patterns. Okay, like for instance, I can actually call these candlestick patterns. I can call this is the tweezer bottom. All right, and I can also as well call this a morning star. Okay, so see how price breaks to the upside, came down, and then start to go up. So now the thing is, when price is about to invalidate, like for instance, now what you're asking is, say for instance, price was supposed to go up, right? And maybe at some point, price tried to make that movement up and then capsize. Of course, your candles will always tell you. Now, let me give you a typical example of what I was trying to explain here. Look at what happens here. Let me look for a very good example. Okay, let's use this. If you observe, price was busy breaking structure. Okay, so this was the last structure price broke here. This was the last structure price broke, right? And price made this movement up. It's simple. Like you would expect that price would want to continue its movement to the upside, right? Which is normal. But at some point, there's this parable that says anything that goes up, always do what? Would always come down, no matter how high that thing flies, no matter how high that thing goes. So at some point, price would always retrace, no matter how high it seems to be leaping. So look at what happened there. So price actually did break this high, but at some point, what happened there? there was a reversal here. And how are you able to also spot this reversal? Because what? Because you are putting the principles of chart patterns in place. So when you pay attention to, if you go back to study the candlesticks patterns, candlestick types and patterns, and the chart patterns, it will be easy for you to know when price would not continue a journey, or price has actually tried to make that journey and something happen. It is either the candles are telling you something, or price actions, chart patterns, it's communicating to you that I am tired of going up. It's about time I go back down. And that's exactly what happened here. Price came temporarily down here. And what happens after price broke this low? We expect it to come and invalidate this low and start coming back down. But what happens here? There was a reversal. There was a reversal. And if you look at the reversal that happened here, price will always tell you what it's about to do. You understand? So it's just about you paying attention to the language and information in candles. That's why I tell you, candles will always tell you where price is actually going to head. Okay, price, just watch this. Price started breaking, okay, like price broke this low, okay, came back down again, broke this low. So we expect it to also, okay, it's going to come down. At least this next low it made, we expected it to come and do what? Come and break it. But price didn't do that. Price reversed from here, okay, reversed from here, and then started going back up. Okay, and if I go to a lower time frame to look at what happens here, I would know that price is going to reverse, and it's not about to go back down. Now let's come where this is 1 hour time frame. Let's go to 30 minutes time frame. Let's go to 30 minutes time frame. All right, so now let's look at the screen here. So this was the low. We're expecting price to break this low. Because every low it makes, it comes to break it. As stated, the structure has been broken. And price came all the way down. So we're expecting it to also what? When price goes pull back, it should come back and do what? Now, watch. If you're that patient trader, right? Sometimes there's a need to always take advantage of this kind of move. Now you want to wait for price to pull back. Price actually pull back, okay, and then sold. But what? It didn't come back down. No, it continued back up. It came back, and then now in this kind of market, you will know that okay, this guy is actually consolidating here. Now let me look for an example where price was supposed to break the previous low it made, but no, it's reversed and started to go back. And then let us look at the factor at that point and see why price didn't go back in the previous direction but decide to reverse back. Let's look for a good, this scenario will have been a very good scenario. Let's just look for another scenario to quickly explain that before we round up. Okay, to quickly explain that before we round up. Oh, so this was actually, okay, look at this example. Okay. Oh, so this is a very good example. So price, see how price was breaking high, breaking invalidating and going up, breaking structure, going up, and then did what? Eventually formed an head and shoulder pattern here. Okay, broke this low, came down, broke this low, came down. Now, what we were expecting it to also retrace and come back to what? Come and break this low. But price didn't. Look at what price did. There was a similar structure. See, price always have similar structure. Look at what happened here. Price that's what reverse back, and this is where you would know that price is not going to break low. Let me bring your attention to this. Hope you're listening. Now price came down here, so we're expecting price to pull back and come back to break. So instead of price to pull back and come down to come and break this low, what did price do? Price went back to break the previous high. And where is the previous high? Look at it here. Can you see? Price came back because we are expecting, okay, price will come back. Okay, normally, this is an impulsive movement. This is a pullback, and then there will be another impulse movement and price will come and invalidate this. But what did price do instead? Price invalidated the previous high it made. And then once this high is invalidated, what happens? That's to tell you that, oh, this guy is not ready to come back down again. Price started moving up. Okay, see how far price went. Okay, before there was what? This is a double top. Equal, see, this is a double top. All these things I'm actually using to explain all of these are the things we've treated, and they are all lined up in one on our YouTube channel as a playlist. So this is a double top. Price broke the neckline, and I told my guys, I said, once price breaks the neckline, it will definitely come back for a retest, and that's exactly what price. Look at the retest here. Price broke, so this is more like price breaking structure, breaking this low, came back down to test it, and then start to do what? Start to invalidate lows. See how price started invalidating lows. Let me use this. Price started invalidating lows. See how price started invalidating lows. No matter how small, these are lows. And look at what happened. Instead of price to continue to invalidate, it couldn't come back to invalidate this low. Instead, it came back to invalidate this high. And price started doing it. So this is how you use structure to your advantage. All right. So any other question, please? One more question before we round up. One last question before we round up. One last question before we round up.
We don't have further hands up. Before we round up, I just want to appreciate you for all you do for us. And if you feel like value was added to you in today's webinar, can we get a compliment for our leader? Can we appreciate our leader in the chat box? And can we say thank you, more value was added, value was added? Can we appreciate our leader Newton in the chat box? So we thank you very, very much for
all right, guys.
your support.
Okay. Thank you so much. Thank you so much. And guys, please go into your various group. Go into your various group. Go and let those people who are not on this call, let them know they miss a lot. Let them know that you got value from Crypto Queen Academy and Digital World Academy, from which of the group you're from. Let them know that you got value. Flood those groups with value. Let them know that you got value. Go there. Go there. That's really what's going to make me happy. Flood that group with value. Can you kindly explain how we can use liquidity or stop on stake trades? Not on tonight's class. When we come to liquidity, we'll talk about that. Okay. Thank you. All right. Mr. Emmanuel Elliott, you want to say something? You want to say something quickly? We was out of times. Please unmute yourself quickly before we go off. Mr. Emmanuel Elliott, can you please unmute yourself and ask your questions? All right, Mr. Mohammed is nowhere to be found. Mr. Musa, please quickly, before we round up, quickly ask your questions. Unmute yourself. Yes, currently
Emmanuel, please, can you ask your question?
Okay.
Hello, good evening. Can you hear me?
Yes, I can hear you. Good evening. I can hear you.
Yeah. Okay, you responded to my question. It's what I typed in the chat box about how we can use stop ones to enter trades. Yeah.
Okay. All right, Mr. Musa Tijani, quickly, please, quickly.
Hello, can you hear me?
Yes, I can hear you.
Sorry, I've been trying to unmute myself, and I posted a question in the group and actually have a cough. That was why I posted my question, but I'll still try and see if I can manage to say it. Now, the thing is that most newbies, they don't actually know much about candlesticks, even if as much as they try to read and understand how candlestick patterns, what they name and how they can identify these patterns. always very hard for them because there are like numerous numbers of it. Are you hearing me?
Yes, I can hear you. Go ahead.
Yeah, there are numerous, like 1,000 of it that they will need, like not like thousands, but there are more that people tend to see every day. Most of these candlesticks. Now the thing is that my question is, how can you do it in a way that it will be easier for them to be able to spot an
All
entry?
right.
Because
Thank you so much, Mr. Mohammed. Have you been following up on all of our lectures?
yes, I have actually.
If you have been following, or if you actually been following up on all of it, then you'll not be asking these questions. We've
No, no,
simplified.
this is.
Listen, I understand what you're saying. Let me answer
Mm,
your question. You asked the question. Let me answer. We have simplified and we've stated how. In fact, we've pointed out the candles, 6 patterns and types that you need to pay attention to. And that is, if you go back to our YouTube channel. Of course, I think Crypto Cream just dropped that a link from your respective group. If you're from Crypto Cream, go on our YouTube channel. You will see where we explain the candlesticks and the candlesticks patterns and types, and the ones you should pay attention to, because these are the ones that most likely shows up on the chart on a daily basis. You always come across them. In fact, they happen to be the most important. They are there on our channel. Okay, please take time to go and actually watch those videos, then you understand what we're talking about. Okay.
All right, thank you very much. Although
All
I'm
right.
not a newbie though, but I'm just
Although,
acting on behalf of the newbies. Like
yes, I'm
just
saying,
act.
yeah, of course, I understand that has been treated. That I actually took that into consideration before now. Before I did due diligence to that.
All right, thank you very much. I
All right,
really
guys,
appreciate
please don't forget to subscribe to our channel. And remember to flood your respective group with values, that you got values, and let those who failed, who refuse to attend tonight's class, that very soon they will pay for this content. They will pay for this content. Since they have access to free content and they don't want to attend, let them know that you got value so much tonight and they missed out. All right. Thank you so much, guys, for coming up here. We appreciate you for the time that you used to come up here. And we also appreciate you for letting us know that we are communicating values to you. Someone asked me a question, what is the name of the YouTube channel? Please, the link has been dropped. Okay, look at the chat box, you see a link there, or go to your respective group. If you're from Crypto Queen Academic or you're from Digital World Academy, ask for the YouTube link. It will be dropped there. Ask for the YouTube link. You get the link from the group. Once again, thank you everyone, and it's a good night from my end. Good night all, and
Bye, everyone.